Dumelang Bagolo, my name is Nicole Mjoli. For those of you who do not know me, and for those of you who do know me, thank you for tuning in to my latest video. Today's video is about credit score. I know, a topic that we don't like much, but I decided to do this video because I did a video on my car buying experience, and I figured sometimes for those of us who don't buy cash, you know, credit goes hand in hand with big purchases such as car buying, home buying. So sometimes we don't know how to improve our credit score and all those things. So I decided to bring you guys a video to explain. Okay? So if you enjoy this video, don't forget to like, share, and subscribe, and enjoy. So first question, what is a credit score? A credit score is basically a number between the value of 300 and 850, and this number is used by companies to determine our credit worthiness. You know, they look at this number. It's just like your mark on your results. Let's say you wrote a test and you got 80%. You obviously know that 80% is better than 70%, right? Credit scores work in the same way. It's a number that companies use to see our credit worthiness, and obviously they look at a whole lot of factors to determine this number. So a credit score can be between 300 and 850. So what is a good credit score? There is no definite answer for what a good credit score is. Some sources say 670 is a good credit score. Some say 700 is a good credit score. But obviously, the higher the credit score, the better. So, some might be asking, Nicole, where do you check your credit score? Where do you find your credit report? Where do you find all these things? It's all good and well knowing that something like a credit score or credit report exists, but where do we actually check it? So you can actually check it for free, yes, for free, on Clearscore or on Experian. I'm sure there are many more sites that do allow you to check for free, but those are the two that I know of, and I prefer Clearscore. So I will link it in the description below where you can check out your credit score for free, and they also send you a monthly credit report. How cool is that? So you can always keep track of your credit score and see how it's performing or how it has performed over a certain period. So like I said in the beginning of this video, credit scores are used when you are going to a company. Let's say you need a loan, for a car, or you need a loan to buy a house, or you need a personal loan. Companies will look at their credit score as well as do other checks to see whether you qualify or not. So having a good credit score does not necessarily mean that you are automatically approved, but obviously the higher the credit score, the better. So the companies also look at, maybe for example, if you want to take out a car loan, they can't just look at your credit score, because I mean that's not the only thing that will tell whether you qualify or not. They have to look at, for instance, your current commitments, and see whether you do qualify. Because I mean, you can have a very good credit score, but then you're overcommitted, like you're paying too many bills. How will you afford the car or the home loan or whatever? So having a high credit score does not necessarily mean that you are approved automatically for loans and all those things. So what are the benefits of having a good credit score? Obviously, the most obvious one is that your chances of being approved for credit are way higher when you have a good credit score compared to when you have a terrible credit score. And also another benefit is that you get competitive interest rates. So like I said in my previous video, my credit score was very low because I didn't have, a record or anything like that. I didn't have any debt, so I didn't have credit, I didn't have nothing. So anyway, yes, my credit score was very low, first of all, and that led to me having to pay a high interest on my car loan. But I don't stress about that because it's come down now, obviously. But starting out, my percentage for my interest was very high, very, very high. It was up there in the clouds. But yes, if you have a good credit score, one of the benefits is that your interest will be lower than someone with a bad credit score, because your credit or your history is good. They see, this person does pay their accounts. This person has a good history. So chances are that they will not screw us up. Alright, so what happens if you already checked your credit score and your credit report and you find that, oh my gosh, my credit is not as good as I would like for it to be? Well, there's nothing to worry about. Like, you can improve your credit score, and I'm going to be giving you some ways in which you can improve it over time. And some changes actually happen very quickly. Like, sometimes you can actually improve your credit score over 30 days. So by the time your next report comes, your credit score would be new lowest. So the first way in which you can improve your credit score is obviously by paying your accounts, right? So if you have the clothing account, if you have that I don't know what other small accounts there are, but if you have that clothing account, if you have that car loan, or let's say that home loan, make sure that you do pay your bill on time, and also make sure that you pay at least the minimum. Because even if you pay like a big amount, let's say your monthly installment is 5,000 rand, and you decide, oh, this month I'm gonna be late, I'm gonna pay them a week later, but I'll pay them 7,000 rand to cover for that. It doesn't work like that. If you pay 7,000 rand but you're paying late, it will still negatively impact your credit score. So you need to make sure that you pay on time and at least the minimum amount. Next one, I've written them down, so don't mind me looking at my book. Second point, try and keep your credit utilization low. Most people will say that you have to try and keep it under 30%, others will say under 40%, but the lower the better. So what is your credit utilization? Let's say, for example, let's just say you have a credit card, right? And the credit limit is 10,000 rand, right? The money that you spend on that 10,000 rand, that will be your credit utilization. It's the amount of credit which you used. So if they say, okay, you credit utilization of 30% is better, then obviously you will have to keep it at your spending limit, or you will only spend up until 3,000 rand out of the 10,000 rand, right? Simple. Why is this important? Think about it this way. If you were to borrow someone, or if you were a creditor and you saw every month, good, Nicole is spending 10,000 rand of the credit limit, like she's spending all of the money, you'll be thinking, maybe this girl has some money issues or some finance issues go high. Now she needs to take that whole 10,000 rand every single month, you know. That doesn't reflect very well. But if you see that Nicole only uses she uses 2,000 rand out of the 10,000 rand, or she uses 1,000 rand, this girl is very good at managing her money. She doesn't need a lot of my money. She uses her money, or most of her money covers her expenses most of the time. Third point, your credit report, right? So I told you guys you can check your credit report on Clearscore or on Experian, but I use Clearscore. I feel like it's simple, I know, but it doesn't matter. Anyway, so once you get your credit report, you go through all the bills or all the creditors' information on that report, right? So they'll write, for example, let's say you have an Edgar's clothing account. They'll write there Edgar's, and let's say the limit is 4,000 Rand. They'll write 4,000 Rand, and then if your account is in arrears also, they'll write that value there and all those things. So on your credit report, when you do get your credit report, you need to check if all the information on there is correct. Because imagine you know that all your accounts are up to date. You don't owe anybody money, nobody owes you money, sharp. And then on your credit report it says you have an account that's in arrears, go Edgar's ubakolota 3,000 and you haven't been paying for the past, let's say, 2 months. Imagine what that does for your credit score. So always fix the errors that are on your credit reports if you do have errors on your credit reports. I have never had any errors on my credit report, but for those who do, just contact your creditor and tell them, oh good, yay, you guys are saying that I owe you 3,000 Rand. How lame? Please guys, please fix it. And I'm sure they will help you guys. These people are not bad guys after all. They will butter you up so that you can keep on coming back to them again. So if you call them and you complain, they will help you. Point number 4, have a mix of credit, like have different types of credit, right? So what this basically means is that you should have like short-term credit, long-term credit, secured, unsecured. It just shows banks and creditors that you do know how to handle your different types of credit. So your secured credit will be your credit that has like assets attached to it. For example, a home loan or a vehicle loan or things like that, right? And then your unsecured will be those that don't have anything to back them up, like for instance your credit card loan, right? Or your credit card, your credit card. And then your short-term and your long-term loans or credit is like your clothing accounts, your short-term, and then obviously your long-term will be like your personal loans and home loans and all those things. So make sure that you have like a mix of those. I'm not saying go out and now open accounts because you want to increase your credit score, but it's nice to have, you know, a mix of those. Like I have my car loan, and then I have a clothing account which I don't really use, and then also on my credit report I've actually seen that I have a contract with Vodacom, so I've actually noticed that it actually reflects on my credit report. So you don't always have to go and make debt, you know, like debt. You can have like your contract, your phone contract or your laptop contract or whatever contract that you have. Don't go make unnecessary debt, guys. Please just maintain the debt that you currently have, if you do have, and then those things also count towards, like your contracts also count towards the credit, right? I think we're number 5 now, right? Number 5, yes. Don't do too many hard inquiries. So what are hard inquiries? Those are like, for instance, you go on a car website and then you want to just check if you qualify to buy a car, even though you know you're not going to buy a car anytime soon. You just want to check, just want to have that feeling, how it feels to buy or to qualify to buy a car. That's a hard credit check. When a company, a creditor, goes and requests your credit score, right? A soft a soft inquiry will be like when you go and request your own credit score, like when you go on Clearscore and stuff like that. Those don't damage your credit score. The hard inquiries do. I'm sure those of you who've bought cars before were told, guys, please limit your applications to 3 at a time. If you've passed, or if you reach 3 and all banks rejected you, just wait a few months, because your credit score takes a knock and then you have to wait for it to go up again, and then you can come and apply again, right? So stop fooling around on those websites. We know it's nice just checking out, can I, do I, will I qualify? But don't do that. Your credit score does take a knock, but when you use soft inquiries, they don't take a knock. So if you want to fool around, you can fool around on the Clearscore website. And then number 6. Okay, so basically your credit score is based on credit history. What does history mean? It means the past, right? So if you have no history, or if your history is very short, your credit score won't be so good, right? So the longer you hold an account and manage it very well, maintain it, pay it off, pay it on time, pay the minimum, the better for your credit score. So when you hold an account for longer, that also helps your credit score, right? So if you're gonna open an account, do 5 months, 3 months, 2 months, and then close it, and then open another account, 5 months, 2 months. That's also hard inquiry, by the way. And then 5 months, 2 months, like, that's not very good for your credit score. You need to hold those accounts, keep them there, keep them open, you know? Is that open relationship? But yes, do keep them open. I've lost track of the number, but whatever number we are on, that one. Then if you have any judgments or defaults, so judgments are basically, you know, like when you haven't been paying your account and then you're handed over to the lawyers and stuff. If you have those outstanding judgments and defaults, please do make sure that you do pay them off, because they also reflect badly on your credit score. But when you do pay them off, make sure that you get a letter from the creditor stating what this person has paid off the account and all that, so that your credit score can start improving after you have paid this judgment or this default, right? Guys, always make sure that you manage your accounts very well, please. Like, you might think, oh no, I'm still young, I can mess up now. But sometimes these things will follow you. They will follow you. They will be you. Yo, guys, I'm gonna swear. But anyway, they'll be chasing you when you're older. You're thinking, oh, now I can settle down. I'm more mature. I'm older. I'm wiser. I can buy a car. And then when you go buy a car, they're like, where now? So how can we borrow you money? Take credit very seriously, unless of course you decide when you will buy cash. If you can buy a car cash, if you can buy a house cash, by all means do it. But if you can't, don't mess up your credit score. Anyway, I hope you guys enjoyed this video, and I hope that you'll use these tips and that you will continue to build your credit score. If you enjoyed this video, don't forget to like, share, and subscribe. Until next time, and bye.